All right. When I first put the pieces together here, I felt a lot like that Ancient Aliens guy. It was aliens. And normally this would be a massive conspiracy, a crackpot scheme so corrupt that we couldn't even dream of it. But I promise you, all of this really happened. It is true. But don't worry, everyone. I'm sure that there is a perfectly reasonable explanation for everything that I'm about to tell you. I really am. I'm a reasonable person. I believe in Occam's razor, and I want to give everyone the benefit of the doubt. Unfortunately, a lot of the mainstream media is not going to push this story, and I'll get to why that is in just a moment. But first, let's walk this together calmly and probably without aliens. Setting the scene Monday morning, 6:49 a.m. New York time. The market's quiet. No breaking news, nothing going on. The world is sitting on a 48-hour ultimatum to Iran that Trump issued over the weekend. Open the Strait of Hormuz, or we are going to obliterate your power plants. That deadline was Monday morning. Very quiet, very still, nothing going on, just the sound of the markets doing nothing. Then, in a single 60-second window, someone places over $500 million in oil futures bets. Reuters says, using London Stock Exchange Group data, 5,100 lots of Brent and WTI crude futures sold in 60 seconds in a market that was otherwise completely flatlined. The chief oil analyst at Analysts reviewed the data and said, quote, "This is abnormal for sure." Abnormal for sure. A $500 million bet placed in a single minute in a dead quiet pre-market, 15 minutes before the president goes and posts something that will move global oil prices by 15%. And the professional assessment of this is abnormal for sure. Sir, a rapper in an American flag suit winning a lawsuit against a bunch of cops? That's abnormal for sure. $500 million is a bit beyond that. And right on cue, 15 minutes later at 7:05 a.m., Donald Trump posts on Truth Social that the U.S. had very good and productive conversations with Iran and is pausing all strikes on power plants for 5 days. Oil, the prices went all over the place, numbers flying everywhere. I don't even know what half of these numbers mean, but I'm going to say them anyway because it's going to make me feel like a smart finance bro, and I can probably post it to a Hinge profile somewhere. Brent crude falling from $112 to $99. WTI drops from $99 to $86 simultaneously because there were also mysterious S&P 500 futures purchases at $649. Stocks rocketed up $1.7 trillion in a blink. That means whoever made those trades at 6:49 a.m. made an extraordinary amount of money. Then suddenly, Iran said the conversations didn't even happen. Half those gains evaporated, but this lucky trader was probably fine either way. And like I said at the beginning, I'm pretty reasonable because maybe this was just a coincidence. A very specific coincidence in which someone happened to make their largest trade of the morning in a 1-minute window, while otherwise the market was quiet, perfectly anticipating a classified presidential decision about a war. Or maybe they just had really impressive intuition. Somebody woke up on Monday and thought, man, I've got a feeling that today is the day that Trump blinks. And I'm going to bet $500 million on that feeling before I've had my coffee. It'd be the most expensive hunch in human history. It's totally possible. Or, and I'm just spitballing here, someone knew what Trump was going to post before he posted it and used that information to make an obscene amount of money on a wartime commodity market. When executives use confidential corporate information to trade, we call that insider trading, and it is a federal crime. Paul Krugman, a man with a Nobel Prize in economics, presumably the next award that Trump's going to demand from somebody, published a piece this week with the title, "Treason in the Futures Market." His argument is that when confidential information about national security specifically, classified knowledge of whether or not the U.S. is going to bomb another country, the word for that information, using that information for profit, is not insider trading, it is treason. Treason. So when Reuters asked the relevant authorities about what happened at this trade, the SEC declined to comment. The White House didn't respond. The CFTC, the Commodity Futures Trading Commission, which is the federal agency specifically tasked with regulating this type of market, was not immediately available. The futures regulator was not available for a $500 million suspicious trade in a wartime oil market, with a 15-minute gap between the trade and the president posting that moved the markets. The nation's commodity watchdog looked at their phone and said, "Oh, the media is calling about possible treason in the oil markets," and they sent it to voicemail. That's a completely normal thing that happens. Now, you might be wondering, if this is as significant as a Nobel laureate saying the word treason, why isn't this the lead story on every financial news network? Why isn't Wolf Blitzer grooming his beard for a situation room of suspicion? Why isn't the Wall Street Journal all over this? And that's an excellent question that I'm glad I rhetorically asked myself. It's all because the Wall Street Journal had a partnership with Polymarket. CNN, a partnership deal with Polymarket. Substack, a partnership deal with Polymarket. Yahoo Finance has a partnership deal with Polymarket. And if you go look at their social media, they are legally required to attach a disclosure to every single post about prediction markets that says, disclosure, Yahoo Finance has a partnership with Polymarket. Major League Baseball, they just signed a deal with Polymarket. The media infrastructure that would normally cover a story like this about a suspicious political trading on prediction markets has financial partnerships with all the media organizations and the prediction markets themselves. And I'm not saying that these outlets are going to actively suppress a story, but we do know that editors, they're going to ask more questions. Lawyers, they're going to get more involved. The how do we frame this meeting takes a lot longer. And in the meantime, the story sits, and the news cycle moves. And a story about a potential $500 million trade based on classified war information slides down the homepage behind a piece about the housing market and a profile about a cute Labrador retriever that won a dog show. This is a conflict of interest. A conflict of interest, all it requires is money changing hands and human nature doing the rest of the work. When you've taken a check from someone, you don't necessarily have to be told to go easy on them. You just do. It's the entire reason we have disclosure rules. Except the disclosure rules are now the bottom line of Yahoo Finance articles, and it's not the thing that stops the conflict from existing. But let's say you're not reading Yahoo Finance. Let's say you found this story and you understand what happened. And you want to know, why won't someone do something about this? We have a regulator, we have laws, we have a Securities and Exchange Commission. Why is everyone declining to comment, and why are they not available? Well, we covered this several weeks ago on this very channel. And I'll connect the dots for you again because the dots have gotten even more dots. Don Trump Jr., paid advisor to Kalshi. It's a political gambling app. Publicly announced that he is a paid advisor. Don Jr., also on the board of Polymarket, Kalshi's direct competitor through his venture capital firm. Multi-million-dollar investment. So he's simultaneously being paid by two competing gambling companies essentially in the same industry. And when asked how it's possible, his spokesperson said, Don is committed to supporting the prediction market industry as a whole. So he's not picking sides, he's cornering the market. And whatever wins, he gets paid. The CFTC, the regulator that was not available on Monday, they dropped all of their federal investigations into Polymarkets under Trump. Dropped them. It let Polymarket relaunch in the US after Biden banned it. And this month, the CFTC chairman, who is Trump appointed, they filed a legal brief defending Polymarket and Kalshi against states that were trying to regulate them. Writing the CFTC will no longer sit idly by while overzealous state governments interfere. So the regulator dropped the investigation into the platform that's paying Don Trump Jr. and is now suing states on behalf of the platform that is paying Donald Trump Jr. 38 states filed briefs against these platforms. Nevada sued. Massachusetts, New York, New Jersey, Maryland, they sent cease and desist letters, and the Trump administration sued them back. And because it's 2026 and there's always something worse, Trump's own company announced Truth Predict, their own prediction market, with Crypto.com, whose CEO donated over $11 million to Trump groups. The president's own son on the two competing boards. The president's company is launching a third. The president's regulator defending all of them. And the events being bet on, bombing Iran, firing the Fed chair, passing the SAVE Act, are all decided by the president whose family is cashing the checks. And the mainstream media, the outlets with the partnership deals and the disclosure footnotes are going to have a very hard time telling you cleanly and completely. Which is exactly why channels like us exist and why your subscription matters. So do me a favor, hit the subscribe button, hit that notification icon, because YouTube is going to bury this video without you making all of the engagement signals. And the algorithm, it doesn't care about the public interest. So every like, every comment, every share is how this video gets to someone who needs to see it. We don't have a disclosure footnote. We have you.